Hey guys, and welcome back to the channel. My name is Landon, and in today's video, I'm going to be talking about three basic stock order types: the market order, the limit order, and the stop order. So when we talk about stock order types, these are basically just ways to communicate with our broker when and how we want to sell our stocks and at what price we want to sell those stocks. All right, so let's start with the most basic type of stock order, and that is the market order. A market order is an order to buy or sell a stock at the current market price. One thing worth noting about a market order is the price that you place the order at may not be the price that the trade is executed at. And this is because the market is very volatile, and so stock prices are constantly raising and lowering. And whenever that trade is executed may not be the same as when you place that order. All right, so the next type of stock order is the limit order. And the limit order is basically setting a price point to buy or sell a stock that won't buy or sell or execute that trade until that limit is reached. So for example, if you owned a share of a company, say company X, that was worth $100 and you had a limit order of $90, if that stock price ever went down to $90, your limit order would execute and sell the stock for $90. So one downside to limit orders are if the stock price goes past $90 and you have several shares of this company X and your limit order wasn't able to sell all of those shares at $90, then you would still have some shares left past that $90 price mark. So another scenario for the limit order is when you're buying a stock. Say you have $1,000 set to buy company X or stock X again, and you're just waiting around to see when that stock is going to continue to see a positive trend. Well, you could set that limit order to a certain amount above what the stock price is currently at to execute when that order reaches that amount. The next stock order types are called stop orders, and these stop orders can either be buy stops or sell stops. Buy stops and sell stops are similar to setting limits for the limit orders, but the main difference is whenever you hit those limits or those stop lines, all of your shares with whatever company you have that money invested in are sold as a market order. So for example, if you had a sell stop on that company X we talked about earlier, and right now say it's trading at $100 and you have that sell stop set at $90, well, if the stock price ever went down to $90, your stop would sell that stock at $90, and if you had several shares, it would sell them as a market order, continuously down from $90. So this in a sense could be better in some cases than a limit order, because with the limit order you can only sell a certain amount of those stocks at $90. So a buy stop could be advantageous in some circumstances when you're watching a stock waiting for it to trend upwards. By setting a stop, you can ensure that you can purchase all of those shares at that stop or just slightly above that stop without having to worry about a limit order that you placed on that particular stock. So there are several other types of stock orders, and these are the three of the most basic types. And so hopefully by watching this video, you're a little bit more clear on what the differences are and how each one of them has their own pros and cons. If you like this type of content and would like to see more videos like this in the future, please consider subscribing. Thanks guys, and I'll see you in the next video.